Hey guys, welcome to Lumovest. In this lesson, we're going to learn what the dividend payout ratio is. The dividend payout ratio represents the percentage of a company's earnings paid out to shareholders in the form of dividends. It's calculated by dividing the total dividends by the company's net income. Or alternatively, we can calculate it by dividing dividend per share by earnings per share. Investors usually look at the dividend payout ratio on an annual basis, so remember to use the annualized numbers. If you haven't yet, subscribe to our YouTube channel so you get all our videos helping you become a sophisticated investor. While there are some exceptions, in most instances, the dividend payout ratio usually ranges from 0% to 100%. A dividend payout ratio of 0% would mean that a company isn't giving any of its profits back to shareholders. On the opposite end of the spectrum, a dividend payout ratio of 100% would mean that the company is giving all of its profits back to shareholders. Most companies that pay dividends will fall somewhere along this spectrum. As an example, in 2017, Delta Airlines generated $3,577 million in net income and paid $731 million in dividends. So using our formula, the dividend payout ratio comes out to be about 20.4%. Meaning that Delta paid out 20.4% of its corporate earnings to the shareholders in the form of dividends. Along with dividend yield, which we covered in a previous video, dividend payout ratio is used to analyze a company's dividend payments. Whereas the dividend yield puts the company's dividend payments in perspective with the stock price, the dividend payout ratio puts the dividend payments in perspective with the profits it's earning. We'll go over the implications of dividend payout and dividend yield on investing in greater detail on our Lumovest website, so definitely check it out. The dividend payout ratio is usually much higher for large, mature, and cash flow generative businesses than smaller growth companies. That's because the smaller growth companies are either unprofitable or management wants to reinvest the profits back into the business to grow, which would increase their abilities to pay more dividends in the future. So that's what the dividend payout ratio is. If you want us to make follow-up videos diving deeper into the intricacies around the calculations, hit that like button. Hope you guys found this helpful, and remember to subscribe. See you next time!